Well, good morning, everyone. Welcome back to our trading room Thursday morning. Markets just opened up. Hang on a second here. I will share my screen with you. And a slightly bullish start to the day, at least compared to the overnight. If we take a look here at where the market finished off yesterday, you can see they finished down here. A little bit of a rally through the Asian session, and then the European session kind of held that fairly quiet though for the most part. And here we are right out of the open now, producing a hard edge bounce and a possible sell signal. So we do get an opportunity for a second push on this entry. And sometimes with these big opening gaps, we do see the market retrace a little bit. I think I'm just going to take a single on this one though. We'll see if that actually progresses into anything. We've got loads of support down here. You see we've got this support level here. We've got this support level here. So I'm just looking to see whether or not the sellers will try to make a early move here out of the gate, get into that gap, which could see us trade as low as, I don't know, 43.30. This first swing, though, that's the tough one, trying to ride that one out. That's why I dialed down the risk amount. I suppose in hindsight, what I could have done is I could have risked the trade way up here, which I can still do. That's still within my risk parameters. Let's see what else we're getting. A bunch of yellow bars here on the Hawk. A possible late filter entry here on the Falcon. We're trying to work on a warning dot here. Obviously, we need to see them press that a little bit lower. And we're sitting right on our primary support line. Look at that. So I should have taken my entry. Well, I guess maybe I did take my entry below that primary support. Where did I get filled? No, I didn't. I took it on the wrong side of the primary support, but we'll see how this works out. Okay, so now we've got all the makings for a late filter entry signal also, and you can see that this bar is going to finish down here just below the primary support line. There's our hash mark and entry. This one too, I'm in for 2 contracts, but it may be more prudent just to throw a single on it because it's so early. So we've, pardon me, we've got all the makings for a late filter entry now. And we've got the market kind of congested, a little bit of this sideways action here containing prices. If we see a breakout here, and you can tell I'm favoring the short side a little bit, we might see some follow through. Okay, very important bar that's forming right now here on the Eagle. Okay, not liking the looks of that. So the buyers took a little bit of a rally here off of the primary support, rallied it back up here to the median line, looking for the sellers to show up anytime now. Uh-oh. Oh, no. Come on, sellers, where'd you go? Oh, they're going to tap me here in a moment. Come on. Ooh. On the slight chance that we actually ride out this swing, hey, chihuahua. Okay, we're going to get stopped out here in a moment, folks. Good question, though, here from Carrie. Carrie's asking, do you ever cut your losses short, or do you always wait for the ATR to take you out? No, I almost always try to cut my losses short, and I'll show you what I was trying to do here, Carrie. I actually didn't enable a stop to start, so you know what I did, the initial trade was set up like this, but what I was looking to do was give the trade enough wiggle room to perhaps ride out a swing. So the market brings us in and then starts going higher. I was waiting for it to tick lower. Somewhere through here, it's going to tick lower, almost always. In this case, it's probably going to tick lower now that it's encountered the highs. This is why I always suggest trying to keep your stop back above a fundamental level. You know, keep it back as far as you can to give you the most staying power. Because what I'm looking for is I'm looking for this. I'm looking for the sellers, because I'm a seller down here. I'm looking for the sellers to show that they're ready to participate again. When I have that, then I can take my stop and I can start to roll it down. And usually at this point, I'll start to become very aggressive with my stop. I'll go to something like the bar high low or the parabolics. The idea being, if the sellers maintain control of the market, they're going to keep rolling, they're going to keep moving the market lower. I can keep moving my stops, and the market should eventually go to my profit objective. If, however, the sellers are going to lose control somewhere through here, the buyers are going to step up and stop me out. So in this case, you can see it was pretty close to my original placement if I had started the trade back here. But if I had started the trade back here and I get stopped right about here, it's approximately half of what my original risk exposure was. So I do try to manage the trade once it's underway. I do my best not to keep the trade parameters too tight, however, until we get that swing. So you see, had I left my stop up here, we would still be in this trade. It's not to say we're not going to get stopped out still, but the chances that the sellers are going to step up here, given that this is a fairly significant high, both from the overnight and I think that's near yesterday's highs also at around this 43.67 mark. Okay, so I would have got stopped anyhow, but this is unusual. This is unusual that the buyers or sellers at least don't make one more effort. Here's another example. We don't have a signal here, but let's say that we bought right here. Okay, let's say we bought that, and let's say we started with our stops down here. So the market goes up, it starts to peel against us, we're getting some heat. Now I'm looking for that point where the buyers are going to take control again, because I'm a buyer, right? The market came down, stopped, buyers are looking stronger, I'm convinced to buy, I buy in. Where are the buyers? Oh, okay, that looks like a buying bar. And usually I wait for two in a row. So there the buyers have shown themselves. Now I'm going to start rolling my stop. And again, I'll usually do something very aggressive like the bar high low or something. And well, I'm pretty much holding at this point, and then I get stopped out. But you can see compared to what my original risk was down here, I've taken a hit, but it's been approximately half. What happened here this morning is unusual. Usually we would expect the sellers to show up somewhere through here. See, they tried here, they tried here, they tried here. And you can tell because of the tails on these bars. See, the sellers are trying again, but they haven't got control. Once we get a bar with a wick on it, like this one, then we know the sellers have finally stepped up and they're going to try to move the market lower. Of course, it's too late for my position. Important though, why you need to use your risk manager when you initiate your trade though, because at least the amount you end up losing is not more than what you can afford. So you see here the buyer's still very, very strong, still pushing the market up. All right, so while that was going on, oh, thanks, Jim. Jim giving us some advanced decline numbers here. It looks like things are getting a little bit, well, we've got almost 1,700 on the buy and almost 1,000 on the sell. So it looks like they might be getting a little bit bullish. Yep, that seems about right. Oh, well done, Jim. Jim sold the DAX already, shorted at 63, out at 47. Good job. Okay, another great question here from Carrie. Carrie says, this is where I have the biggest challenge. I can almost always peg the entry correctly, but when I make my stop too tight, I get stopped out and the market retreats and rallies. When I'm patient with my stop, I get stopped out for a big loss. Can you point me to some training for this? Okay, the best thing you can do for yourself is control your risk through your risk percent module. If you don't have the trade manager and you don't want to make the investment, you need to know approximately how much you can afford to lose. So in other words, if you're trading a $10,000 account, you should never have more than $200 at risk. Well, a $10,000 account, you're probably going to be routinely risking anywhere from 2 to 4% of your capital. So your risk exposure should be somewhere in the $200 to $300 range. Maybe if the trade setup looks especially juicy, it should be, you might allow a $400 risk. All right, but that should be the outside. If you're trading a small account like $10,000. Ideally, like I said, the rule of thumb, $200. That way, if you take a hit for $200, it's not the end of the world. I think that's what this one worked out. Okay, so this one was 3%. That's, or pardon me, that's $300. That's 2% of my capital. So yes, the loss is unpleasant. No, it's not the end of the world. All right, I can afford to lose the $300. Okay, so now to the second part of your question, how can you avoid the big loser? Well, can anybody tell me why this one was perhaps a little bit dicey? There's two reasons here that well, three actually. And I'll give you guys a moment to type. Some of you old timers who have been in the room for a while might already know what I'm getting at. Yeah, way to go, Mark. I knew you'd come up with it. Okay, there's a couple of things here that we're looking at that makes this a little bit dicey. First and foremost, this is about a minute after the open, a minute or two after the open. Very, very unpredictable time. Okay, anytime you take a trade that close to the open, you're essentially, throwing darts, flipping a coin, whatever analogy you want to use. It may have worked out. The NQ may have fallen off the map here, but in this case it didn't. Instead, the NQ chose to put in a strong rally. Okay. The other thing that makes this trade a little bit dicey is that I haven't really had a really good test of the extreme. The test of the extreme is this pattern that we always look for to signal that in fact the market is getting ready to reverse. Now, we did have a little one, and this is what made me try, oops, thank goodness I couldn't delete that. This is what made me try the trade, is that I saw this little itty bitty test of the extreme right here, and I thought, all right, maybe the market is trying to turn itself over. We're kind of getting a little retest scenario. Maybe there is a chance that they're going to try to head lower from here. The problem was this level right here. We got down, hit the level, boom, up we go. So I suppose that's problem number 3 is I should have, with these lows so close, I should have actually entered below the low instead of on the hash mark. But if you want to avoid the big losers or the trades where the market, retreats against you, doesn't even give you a chance to get out, make sure you find that test of the extreme. Now let's take a look here. It happens almost always and almost on all your tools. Here is a better test of the extreme. This would have been a little bit more convincing had we seen this in the morning. See, the market comes down. It's essentially the, pardon me, it's essentially the same thing as what we saw this morning in a slightly more expanded version. And but yet this one worked out. right? This one at least fell off enough that you could adjust your stop somewhat, and it looks like it eventually got to your profit objective also. But this one had a very pronounced test of the extreme versus the one we saw this morning, which went up like that, had a little itty bitty one, then came down, retested, tried to go down, and went higher. Here's the same thing in reverse. Here's the test of the extreme. All the test of the extreme shows you is that the market is trying to recapture the original trend, right? So here's the original trend. Buyers press down, market goes up. There is every reason to believe that this green bar sell should work out. When this trade developed, the market's in a strong downtrend. There is no reason not to believe that this green bar sell will not work out. So we take that green bar sell, the market goes down, all of a sudden it starts to fail. Now I'm starting to get a little bit anxious because the sellers have failed to regain the trend. Right? The buyers all of a sudden have shown strength. The buyers are saying, haha, we stopped you here, and now we're going to stop you right here. Now, given the way this trade is set up, I'm hoping and praying I get one more red bar that I can start to roll my stop at least a little bit. And this is now the last chance of the sellers have to regain control of the market. Right? Can you see that? If the sellers fail at this point, then they're going to lose the trend entirely. And what happens next? Okay, we go down, so I go down, and now all of a sudden we reverse as we get back here. And once again, I get stopped out for approximately half of what my initial risk exposure was. And look at what happens, right? The market flounders a little bit and eventually goes higher. But it's always, always this test of the extreme. You may not be right about the direction all the time. And that's, part of trading. But if you have the opportunity to manage your position a little bit better so that you can reduce your risk exposure and watch for these tests of the extreme, this test of the extreme will always tell you that you're stuck on the wrong side of the trade. Now, you see what happened here the other day. This was very unusual. We get a sell signal. Oops, sorry. We get a sell signal right here, but there's no structure. We had every reason to believe that there should be a test of the extreme. And we're waiting and we're waiting, and the market tried here. You see, we actually had a green dot. There was trying to be a little bit of a rally. At this point, I thought, okay, we're going to see a test of the extreme. Nope, nothing. Straight down. Now, the good news is, even though we didn't get it on the Eagle, we did get comparable signals on the Hawk, and I don't know if this swing here was enough to produce a signal on the Falcon. Okay, Mark's got a good question here too, and I think it's about the current market. Oh yeah, Mark's saying, was there any way to know that this red bar buy would have had good follow through to it? Well, we know the red bar buy is always a decent signal, as is the green bar sell. They show us a market that's overextended, and in this case, we're generating a lot of buying pressure. Mark says, is there any way to know that that would have had good follow through even though it was contrary to the band? No. It's the kind of signal that, you're going to take with a little bit of faith. You're going to be looking at the price levels here and you're going to be saying, they seem to be holding support. Maybe I'll give it a try. Maybe I'll throw a onesie on it and I'll buy it above that high, cover it below the low. The good news is you know that if the market brings you in and now all of a sudden starts to reverse, it's the same thing as what we just looked at with that green bar sell, that if they start to reverse here somewhere through here, given all this support, you're going to get a little hiccup. 9 times out of 10. Right? And that allows you to take your stop, roll your stop a little bit, so that if the signal does fail, again, you'll probably end up losing half of what your initial risk was. So here again, you'll probably take a $100 hit. But to look at it and say, oh yeah, it's a red bar buy, it's counter trend, it's going to go higher. No, not really. When this red bar buy printed, the market was still pretty much in a sideways congestion. That's why I took my stop from the initial placement here and I tried to roll it up a little bit higher to try to allow this to happen. Give me that little swing. Give me a chance to get my stops in a little bit. Okay, you're going to stop me out, but at least give me a chance to do something. And now in hindsight, I should have just left them where they were, because even if I did get the opportunity to roll, I still would have ended up losing about the same amount. Right? But I was really thinking that, okay, maybe, if the NQ can just dip below this 43, 48 area, we're going to see it go. And I still think that. I think if we see a trade down here, 43, 47, I think it's still going to make a little bit of a run. But as you can see, that's a long ways away right now. Now here we're working on a red bar buy. This is off the hard edge. So if this one prints, do we want to take it? Class. Mark. Yes. Very good, Mark. Mark says, yes, we want to take it. And we want to take it, well, because it's a red bar buy. Okay, here we go. Red bar buy. It's against the ATR. Okay, now it's with the ATR, so I'm going to set it up like this. Now my profit objective's a little bit far away, but there should be a test at the extreme here. In fact, I can become very aggressive with my stop. So all I've done is the signal actually generated right here. And this is a judgment call on your part. There's no right or wrong here, but I found that by incorporating the squiggly red and blue ATR line, a la Mike Filigera, who likes to use it when he's trading the stock market. And if you don't know how to put this little squiggly red and red and blue line on your chart, just put something in the comment window and I'll show you right now. But we're going to just use that as an added filter. So the signal actually produced right here, it was below the ATR, however. So what we do is we allow the ATR to turn over, which means that this bar here is now going to become our signal bar. And with my logic counter, I know that the high of the bar will be 43.69 and a quarter. But of course you can see it's a trade-off, because had I entered here, I would enter about 10 ticks earlier. Which might be beneficial, seeing how if the market's going to fail, we're going to get a test of the extreme right here. Right? We're going to see the market perhaps trade up, get back to these highs, and then try to fail. right? And that would be our test of the extreme, telling us that the buyers have lost their grip and that it's time to go. Okay, so we'll see. They're going to bring us in here for, okay. So we've got our break-even trigger up here. In fact, I might even bring it in a little bit just in case we do get a test of the extreme. If we get a little bit of a rally here. At least I'll be at break-even if they choose to reverse. And this is really very much a crapshoot at the moment. See how this bar is struggling to get higher or lower? This is a very decisive bar. Okay, so now we're looking for the buyers to come back and support this initial rally and hopefully give us a chance to adjust our stops. And if they don't, well then that's just been our test of the extreme. All right. Now that was unfortunate, but you know, we're still kind of searching for a direction here. Now we're going to look for a retest, which will give us our rule of 3. We've now had our test of the extreme. So now we would be looking for our signal to sell. Yeah, Jim says there's a lot of wicks up this side here. And it's not easy. You know, there's going to be days like this where the market's not going to follow through on either direction. It tosses you a signal one way, it fails. It gives you a signal the other way, it fails. Pardon me. And when you get days like that, you know, where you're taking high probability signals and you're not getting any follow through, you may actually be in one of those days that are falling outside of the norm. Right, so we're going to try to generate another signal here in a moment, and that may be worth trying to sell. First micro macro cross here on the hawk, and look at how the falcon is just stuck. Oh, we did get up to the secondary resistance line, all the way back now to the median line, working on a possible trend change signal. Okay, so let's go back here to the eagle now. Another red bar buy. And as uncomfortable as it may be, if we produce another signal, well, which we are, we're still against the ATR, so once again, we'd have to wait for it to actually turn the ATR over. That might be another buying opportunity. See, this trade here may have failed for no other reason than my stop was too tight. I placed my stop below there, which makes sense. And there you go, we get tagged. Okay, so this is the bar that's going to turn the ATR over, essentially become our signal bar. Oops, come back here. So we'll take that one on the second push. And if you ever feel like you're chasing the market around, it's probably because you are. So if you get that type of impression about your trading, step back for a little bit. Let the thing unfold. Wait till you get a little bit more market structure. Remember, you only really need a couple trades a day. I'm showing you some of these things because we have the luxury of being in a trading room right now. But I also know from experience that very often if we get a double signal like this, that it will follow through. If it happens to engage me again. This is a type of scenario too where you could just, because the market is range bound, you can see this morning's range, we're stuck right in the middle. I know it's a long ways away, but you could just throw a buy order in above and a sell order in below and say, forget this noise, I'm not playing until you guys get outside of this range. Because these are the parameters that they've set for themselves for today. All right, so let's see if we have better luck managing this one now. Okay, so it's turning also. So once again, we're kind of getting this confirmation of this sideways range that we have. Now somewhere in here, the buyers need to show up. And that will be our cue to start getting more aggressive with our stop. Let's see, it's also building into a rule of three scenario, right? We're getting 1, 2, possibly 3 signals against the band. Come on, get up there. Yeah, really a tough little range that we have right now. All right, so now it's it's given me 1 bar, and I'm being a little bit more aggressive. I told you I tend to wait for 2, but you see we're right back near these highs. And this is where the market got turned around before. So the buyers have got to make their presence felt now. If not, you might as well take me out. Come on, get up there. Now, if the market does turn and stop me out here, yes, it is unfortunate, but you have no reason to feel bad about taking a loss on that trade. Yes, you were wrong about the direction, but you did everything you could to manage the trade correctly. Okay, so you see now we're about half of our initial risk exposure, and I'm being very aggressive, again, because we're right near these highs. These little swing highs right here. So this is where the sellers are going to get busy. They got busy there twice before, 3 times if you want to include this area here. And the buyers got busy here, here, and here. So once again, if the buyers are going to maintain control, they're going to have to take out 43.70. All right, so the buyer's still maintaining control. I'm still rolling my stop. Again, a little bit more aggressively. In the same scenario as before. If the buyers are going to maintain control of the market, they need to close this next bar higher. The sellers could get very, very sticky up at this price level, but that won't matter to us anymore because we'll at least be near a break-even position or with a minimal risk exposure. There you go. So now we're pretty much at break-even. We can even throw it to break-even manually. We can nix that. We don't need that anymore. And now we're seeing the sellers get a little bit more active as we get to this 43.75 area. And in fact, I can, be a little bit more generous with my stop now. Maybe not squeeze the trade quite so hard. See, so it looks like the biggest problem I had with this trade right here was my tight stop. Didn't look like it though, did it? When I set it up and I put my stop down below there, that seemed very reasonable, didn't it? But I should have risked it deeper. I should have maybe risked it to the bend here on the hard edge. That would have held me in. And I'd still be, now I'd be in a profitable position. Or at the very least, break even. Instead, I ended up taking a loss when the market retreated here just below my lows, never giving me the chance to adjust my trade. So this is what happens most of the time, right? Most of the time you get a chance to adjust your trade. Like I said, this here was a little bit unfortunate that the market just went straight up and never even gave us an opportunity. Okay, so it looks like they came back and touched us at break even. Okay, fine. That's, given the way the market's behaving today, I'm okay with that. And it may still pop from here. It very well might, but we'll have to look to get in with another type signal. Look at here on the Raptor, how fat that bar is. You know there's a lot of market participation there. That is going to be a big volume bar. So let's see if there's still participation there, if the sellers are still going to step up, if the buyers are still going to try to force it up. And speaking of tight ranges, crude oil getting a little bit sticky. So it looks like this is the high of the morning. Well, technically the market opened at 6 a.m. my time, so this is the high of the morning right here. Here's the low of the morning. We've still got about almost 15 minutes to the crude inventory report. My sell stop order will go down there. Not so sure whether I want to throw my buy stop order in above there just yet. We'll see how they behave. Jim says the bank index is relentless, not giving it up, which seems to be part and parcel for the NQ. Carrie is asking about the width of the bars here, why some are wider and narrower. No, it's not an update to the mean Renko. It's actually the dynamic equivolume bars. And if you email Adam, don't say I said so. Well, I can't promise you a deal, but a few weeks back, we actually had a special discount for owners on the dynamic equivolume bars. And if you email Adam and say, please, pretty please, he very well might extend that opportunity to you still. Seeing how you're a DTS owner, the equivolume bars, for those of you unfamiliar with the term, is they were designed by a fellow by the name of Richard Arms. He's also the same guy responsible for the TRIN on the, it's a stock index indicator. He also did a lot of other type of trading related tools. And unlike some people that develop trading indicators who are merely mathematicians, Dick Arms is a real trader. So he kind of knows how these things should work. And the dynamic equivolume bars, the fatter bars, yes, show you more volume. So we'd really like to see those at turning points. You see what we get here on the Raptor? Look at this. Turning point, turning point. So this is suggesting that the sellers are going to be stronger. Here come the buyers. Let's see if we get another fat bar here or a reasonably wide bar. That would tell you that the sellers are going to take control of the market and probably send the market lower. So that's something you can keep an eye out for. And just as we get a first micro macro cross here on the hawk, good, that's into yellow bars. We do have a red bar buy here, which we can short, and notice we also have a test of the extreme. Now this might actually be one that you want to, oh, you know what, I wonder if I can do this. No, won't let me. I was just going to put a runner on. So we can cover it up here. And if it fails here, remember the red bar buy, it's just an early warning that we're going to possibly see a trend change signal. We should see a first micro macro cross sell signal here if the market starts to unwind. And we're starting to get a little bit more structure now. Okay, so they're starting to turn over here. It's definitely a lot of resistance up here. See if the Raptor produces a sell signal for us. Notice we've kind of had our test of the extreme also. All right, there's our sell signal. So I can actually bring up my, I'll use this. So actually what I'll do is I'll sell below the low of the current bar. Where's my other order? There we go. So if this bar finishes low, it will complete right there. And that will be my entry. And we'll do my stop above the high. Oh, Jim says the DAX is selling off a bit. Okay, here they go. Come on down. Sometimes the hardest part is waiting for the market to give you some structure. Something that you can actually trade. And, you know, as traders, we're all anxious, right? We all hate to miss a move. That's why we show up early. We think, oh, you know, sometimes there's that big rally out of the gate. And yes, that's true. Sometimes there is that big rally out of the gate. But there's nothing you can do about it if you miss it. So always try to keep that mindset that you only need a few trades a day. Okay, well that's percolating. We'll oh, see, now we're getting our first micro macro cross signal. This was the failure of the red bar buy. So now we're generating warning dots on our first micro macro cross. It may end up printing about the same price. Oh, there, it just printed. So more or less the same price as what we were looking at. almost to our break-even trigger. Early trend change signal on the Falcon, early signal here on the Raptor, and a better test of the extreme and a rule of three. 1, 2, 3 counter trend signals on the Eagle here. So it's starting to look like the NQ is maybe getting a little bit top heavy. All right, let's get back to crude oil, and we'll do our bracket trade here on crude oil with our OCO, and we'll buy one up here and we'll sell one down here. And we don't want these too cozy. This is crude oil after all. So we'll give it a couple of ticks on either side. Now here's what I find to be the hard part, finding a decent stop to run. All right, that'll work. I want it fairly conservative. Let's see, was the chandelier better? No, it's about the same. That's a little bit too close to the highs. Okay, so what do we got? A couple minutes to inventory. Oh, we're really near the lows. Actually got an early trend change signal here on the Falcon. We'll see whether or not that holds or whether crude is trying to fake us out early. Okay, should be hitting the floor any moment now. Now what's interesting is very often the DTS signal will predict which way the market's going to move before the market actually moves, like on the report days. So this is an early trend change signal, not the strongest signal on the Falcon, but it'll be interesting to see whether crude continues lower from here or does a reversal. All right, anytime now. Oh, look at how dead they are. They're just waiting for it. Okay, here it comes. Everybody holding your breath. All right. Oh, shoot. It's at the top of the hour. Ah, Eric. You got to get your reports right. Yeah, it's not at 7:30. It should be at 8 o'clock, 11 Eastern. The natural gas inventory is out now. All right, let's nix that. Let's put that away. But you get the idea of what you'll be looking for. Okay, looks like we either hit our profit target or our break even here. Oh, hit our break even. And looks like they slipped us a tick too. And on our Raptor, did they find our profit target or break even? Oh, well, a little bit of both. A couple of break even ticks there. Because I was watching crude oil, darn it, for the report that never was. All right. I'm sorry. Today, again, I'm going to have to close up the room a little bit earlier than usual. We'll try to hang out here for a few more minutes. Wow. So this support that we've been seeing here all morning, right around the median line, still very influential. Look at that. Nailed it twice, right on the number. So we'll see if this develops into a late filter entry. I think that's going to be it for the buyers. They're going to see another run. But if you're looking for, what would apparently be a high probability trade, shorting 43.57 seems like a pretty good idea. And the NQ has got loads of room here to the downside. We've still got that big gap out of the morning, which could see prices trade as low as 43.30. That's a long ways away. Yeah, they're still waffling quite a bit, though. They just don't want to commit. All right, here we'll end the session on this green bar sell. Now, what makes this green bar sell a little bit more attractive than most is we haven't had a real test of the extreme yet. We do have an opportunity to, and this is a type of trade too, it's a lower probability trade. You may want to dial down your risk amount, maybe to 1%. But it looks like we're going to get a fill here in a moment. And the whole idea behind the green bar sell, and I should have a profit target enabled, is that we're just looking for the test of the extreme. Sometimes it will lead to a resumption of the trend, but more often than not, we're just going to get a little bit of a blurb here to the downside, enough that we can take some profit on. No, they're going to make a liar out of me today. It's just one of those days they do not want to play nice today. What can I say? Oh, and now we're getting a first micro macro cross, so our stop is in the in a good spot, but do we have a chance to actually do anything with it? Or is this first micro macro cross just simply going to stop us out? Okay, so we've got a chance now to adjust our stop a little bit. And once again, this is really the last chance the sellers have to pull this market back together. In fact, I could be a little bit more aggressive again if I wanted. I could go bar for bar. But you know what? We'll give it 2 bars today. You know, just because this is a first micro macro cross signal and it will likely continue a little bit higher, that doesn't mean that it won't retreat somewhat first. Maybe give us a chance to get that back to break even. Okay, working itself into a possible macro pullback. Nope. All right, you guys. Well, we're going to close up the room. Like I said, I need to be somewhere. I'm sorry, I've got an appointment this later today or later this morning. I will see you guys again tomorrow morning. If you are trading today, the market very much in a sideways range, I would wholeheartedly endorse a short of 43.57, anywhere below there. But yeah, they're just sideways right now. They really don't want to commit to too much. Okay, so be careful. I'll talk to you guys tomorrow. Bye for now.